This is Matthew Cratter from Trader University, and today I want to talk about paper Bitcoin versus paper gold. And the real question I've been getting is, are there only 21 million Bitcoin? This is obviously built into the Bitcoin protocol, but is the actual effective supply much larger since there's a lot of paper Bitcoin out there? Paper Bitcoin being Bitcoin ETFs, Bitcoin futures, things like that. I got this question from Paul Game. Surely the 21 million limited supply of Bitcoin would only be relevant if there's no futures trading allowed. The paper futures market artificially increases the supply. Now, I'm not sure this is completely true simply because for every short futures position, if you're trying to increase the supply on the short side, there's an equal and opposite long futures position. Every futures contract is zero sum. And this is how they settle, where when the long side of the contract loses money, the short side makes money. When the short side loses money, the long side makes money. So no one thinks that there's unlimited corn in the world simply because you can trade futures on it. If so, you could just make more futures and no cow or pig need ever starve again. The flip side of this, of course, is what if government futures price manipulation was in fact keeping corn prices low? I'm not sure you can really do this with futures because, as I said, there are two sides to every futures. But if they were doing that, it would be the corollary would be that it would be great for anyone who wanted to stockpile corn simply because you could buy it at a price below its fair free market value. I'll show you the futures, the corn futures here briefly. This is on the CBOT, on the CME group. We can see here that the open interest just in the front 3 months is approximately 1.5 million contracts. Each of those contracts is worth 5,000 bushels. But this is an example of if this open interest went up, it would mean that there is more corn in the world. Now, obviously, you don't have to accept settlement of corn. You can roll the futures to another month. But if you're a seller of futures in this month, you have to be a buyer of futures to close it. And then you would open up a short in the next month. So I think this futures argument, I don't totally buy it. We can see here that the price of corn has done quite well in spite of the fact that their futures traded on it. But what I do think is possibly a bigger concern is paper gold, paper Bitcoin in the form of ETFs. So we're going to approach this by talking about the historical problem with paper gold. Gold ETFs, possibly gold futures, so I'm a little bit more skeptical of that. Those would be forms of paper gold versus real gold, which would be physical gold in your possession. And this is an important wrinkle because even if you're holding, let's say you buy a couple bars of physical gold and then you give it to some company to warehouse for you, if you're letting someone else store your physical gold, it's almost like you have paper gold or a degree of paper gold simply because there's counterparty risk. At some point, they may abscond with the gold, or the government may say that they can't give the gold back to you. This is, of course, what happened in 1933. And so letting someone else hold your physical gold is basically like holding paper gold. You just have a paper claim or receipt that allows you access to this physical gold. Most of the time you'll have access, but in a real crisis, when you actually need that gold, you may find that they don't accept your paper claim. In addition, that custodian that is holding your gold, or even the government, as we said, might decide to freeze your physical gold holdings and not give it back to you. This is what happened in 1933 when the government confiscated, the U.S. government confiscated all gold holdings. You can read about it. This was Executive 6102 that was signed by President Franklin Delano Roosevelt on April 5th, 1933. So this has happened historically, and it can happen to anything that's centralized. This is one of the problems with the physical nature of gold. It naturally leads to centralization because it's very heavy. And so you ended up, even before the government confiscated gold in the U.S., it was already quite centralized. It ended up in big government vaults and bank vaults. And as a lot of you probably already know, the modern fiat system, the paper money system, grew out of these paper receipts that were backed by gold that were issued by local banks. And so the seeds of the current fiat financial system, which is a terrible system, really was born out of the gold standard. And as I've said, this centralization of gold made it very easy for the government to confiscate in 1933, since most of the gold was in banks and was not in people's houses. If you try storing $10 million worth of gold in your house, it turns it into a honeypot, very difficult and dangerous to secure. And this is one reason why gold ETFs are so popular. So the gold ETF like GLD, for example. But there's a big problem with paper gold, and that is the fact that the paper gold market has expanded so widely that if every holder of paper gold decided to accept delivery of their physical gold that they had a claim to, there would not be enough gold to go around. And the number of paper gold claims is something like 100x the real physical gold that is out there, that's available in the world. And so you have this giant shadow paper market that looms over the actual physical gold market. I want to pause right here briefly to say, if you're enjoying this video, please hit that subscribe button and hit the like button, and maybe share this with a few friends, whether they're Bitcoiners, interested in cryptocurrency, or interested in gold. So we have this problem where there's this giant paper gold market that overshadows the real physical gold market, and it can lead to some weird things. So for example, in March 2020, when we had that big liquidity crisis, when really everything went down, all the commodities went down, stocks went down, bonds went down. The only thing that went up was the value of the US dollar. When this happened, the price of GLD, which is the gold ETF, went down, but physical gold prices went up. If you tried, I was speaking to people who were trying to buy gold coins or gold bars during that terrible couple weeks in March, and the physical prices of gold had actually gone up. They were trading above where they were pre-crisis, but the paper ETF, the GLD ETF, actually crashed during those couple of weeks. It did recover, but you can have these weird divergences where the market that's really liquid, GLD, everyone hits the bid because they're trying to find liquidity everywhere, and the physical gold market, of course, is not as liquid. This is one thing about GLD and other gold ETFs. Some of them, it's impossible to redeem your physical gold that's behind your ETF shares. I can't remember if you can do it with GLD, but either way, whether you can or not, they always make it very difficult to turn your ETF shares of gold into real gold. And so you have a situation where gold prices probably are being suppressed by this huge paper market. When someone buys GLD, perhaps it's being backed by real physical gold, perhaps not. There's a lot of controversy around this, and I'm not sure exactly which side to believe, though I'm inclined to believe that sometimes it's not fully backed. But either way, if you buy paper gold, you're not buying physical gold, and as such, a gold ETF would artificially, in a sense, increase the available supply of gold, especially if the ETF was not being backed by physical gold in a vault somewhere. Now, Bitcoin does not have the same problems, fortunately. It's digital gold, it's gold 2.0, and as such, it makes things a lot easier. It's much easier to send, to settle, to verify that it's real Bitcoin. You can do this just with a computer. You don't need to take a little scraping and apply all these chemical tests as you need to do with a gold bar. And sending gold bars around the world is very expensive, very difficult. This makes settlement more difficult and more expensive. You don't have these problems with Bitcoin. It's very easy to hold Bitcoin on a hardware wallet, memorize the recovery seed, and you can basically walk across a border with $1 billion worth of Bitcoin stored in your brain just by using one of these 12 or 24 word recovery seeds that back up a hardware wallet. So gold, Bitcoin has even more scarcity than gold, and in addition, it has these nice characteristics that it's much less physical, and so it's easier to verify that something's real Bitcoin, much less expensive, and easier to send it around for settlement. Hence, there's really no reason for anyone to buy paper Bitcoin. People do it just out of ignorance. It's hard to buy, as we said, $10 million worth of gold and have it delivered to your basement and stored there safely. $10 million of Bitcoin, very safe. You can store it in using a multi-sig solution, you can store it in your head, and it doesn't have the same physical or constraints or the same costs. This is one reason you'll always hear Bitcoin is saying not your keys, not your Bitcoin. It's very important to own your own Bitcoin and control the private keys, because then you know you have the real thing and you know that you control it. If you have an account with, if you leave your Bitcoin on Coinbase, or if you leave it on Kraken or Gemini or BlockFi, they may not give it back to you at some point. If there's a hack, your Bitcoin could be lost. BlockFi might say, well, we're not going to redeem it for 2 weeks. This has happened sometime. And so this is why it's very important to not own paper Bitcoin, but to own the real thing and to control the private keys. If you buy Bitcoin on Robinhood or PayPal, you own paper Bitcoin simply because you're not allowed to withdraw your Bitcoin and control it. Your account can obviously be frozen or shut down at any time at Robinhood or PayPal. Both of these companies are famous for doing this at various points in time. Whereas if you buy Bitcoin on Kraken, Coinbase, Gemini, one of these services, you can withdraw your Bitcoin and hold it and store it on a hardware wallet. And it's the hardware wallet that controls your private keys for you. If you buy Bitcoin on Robinhood or PayPal, you don't know if it's 100% backed by real Bitcoin. And if Bitcoin were to move up suddenly, then Robinhood and PayPal did not own physical, actual Bitcoin backing their paper Bitcoin, there could be a big problem. They might not be able to make you whole. Bitcoin were to gap up 100% or something overnight, it could cause some problems for companies unless they're fully reserved. And again, you never know. There's also a good chance that they might force you to settle at the pre-spike price of Bitcoin. So they'll let you get out of your Bitcoin position, but you'll have to get out at 35,000 instead of 70,000. We've seen Robinhood engage in this kind of behavior before, which is why I'm not a fan of them anymore, when they only let people sell GME and AMC last year and not buy it. If you control your own Bitcoin, you don't have to worry about stuff like this. You have the Bitcoin in your private possession because you control the private keys. If you leave your Bitcoin on Robinhood or PayPal or BlockFi, they control the private keys. So buying paper Bitcoin is quite foolish because you give up one of the great aspects of Bitcoin, which is this self-sovereignty, financial self-sovereignty and control. But issuing paper Bitcoin, if you're a company like Robinhood or PayPal and you don't back it with real Bitcoin, that's also quite foolish because you risk insolvency as a company. Or when there's a Bitcoin ETF, if they were not to back it completely with real Bitcoin and Bitcoin spiked up, they might get in a lot of trouble and go out of business. So if you issue unbacked gold, you'll probably get a government bailout if you're selling paper gold. But if you issue unbacked Bitcoin, there's probably not going to be a government bailout coming for you. If gold spikes because central banks are one of the main owners of gold, one of the biggest holders, those central banks can step in and sell some of their physical holdings to keep the price down. They don't need to do futures. They can also sell some physical holdings. And this is, of course, what was happening for a lot of central banks in the late 90s, early 2000s. The Bank of England sold off a lot of its gold and drove the price down. If Bitcoin spikes, central banks currently don't own any Bitcoin as far as we know. There may be some small central banks that do. Maybe the Federal Reserve has been accumulating it without letting us know, but I think it's more likely that none of them have any Bitcoin to sell. So very unlike gold, Bitcoin, if Bitcoin spikes, central bankers aren't able to control it in the same way, simply because they do have a monopoly or close to monopoly on the control of gold, whereas they don't have holdings of Bitcoin. Central banks could sell naked shorts on paper Bitcoin using the CMA futures, for example, which are cash settled. But they could get into a lot of trouble with this if they don't actually have the Bitcoin to back it, simply because you could get all the Bitcoiners getting together, which at some point already includes corporations. It could start to include whole countries. And if these Bitcoiners get together, both retail and institutional, and national actors, and they get together, start acting like Wall Street bets, driving up the price of Bitcoin, you could have a point. You could have a real problem where even some small central banks could go insolvent. So it's very different, the price manipulation of gold when you're a central bank that owns a lot of gold versus the price manipulation of Bitcoin when you're a central bank that doesn't own any Bitcoin. Now, currently, the Bitcoin paper market is much, much smaller than the real Bitcoin market. There are some Bitcoin ETFs, not in the US yet. And there are services like Robinhood and PayPal that allow you to own Bitcoin, and they may or may not be backed by real Bitcoin. But it's certainly not as dramatic as it is with gold. As we said, paper gold to real gold is something like 100x. And we're nowhere near that in Bitcoin with the Bitcoin paper market, as far as I can tell. Could paper Bitcoin eventually be used to suppress the price of Bitcoin? Yes, it's quite conceivable, especially if the size of the Bitcoin paper market continues to grow. But this only happened, as we said with gold, once central banks had bought up and confiscated much of the world's gold. So they confiscated, the U.S. government obviously confiscated a lot in 1933, and this gave them some powers around the price of gold. It's very different for Bitcoin, I think, though, simply because it doesn't have the same history in central banking. And the game theory is quite different simply because Bitcoin is so scarce, it's so easy to verify that the game theory suggests that it's actually much better to be the first central bank to buy Bitcoin rather than the first one to short it. So if your central bank is shorting Bitcoin, while my central bank is trying to corner the whole Bitcoin supply by just printing up fresh fiat money and buying Bitcoin, your central bank that's losing, that's trying to short Bitcoin is going to be on the losing side, especially as we get more and more hodlers taking their Bitcoin into cold storage and effectively reducing the supply that way. So the game theory suggests that if you're a central banker and you're smart, maybe like the Singapore central bank or the Chinese central bank, that you're actually much better off buying Bitcoin rather than shorting it. And if the Fed tries to short Bitcoin while the Russian and Chinese central banks are buying Bitcoin, they're going to get in a little bit of trouble. So the game theory suggests you should just print a lot of money and buy Bitcoin with it, especially if you're printing money already for useless government spending. If Bitcoin price suppression is happening, then it's actually good for you and me. It allows us to buy more real Bitcoin for the same amount of fiat money. So all I would say, if the authorities are keeping Bitcoin's price down right now, please do it for another 6 to 12 months so that I can buy some more. I would also say that even with price manipulation, the market cap of gold, the global market cap, is still somewhere around $10, $11 trillion. This is the equivalent to $500,000 Bitcoin. So even if there is this sort of manipulation, there's still a lot of room for Bitcoin to go up 15, 20x from here, even if it just rises up to the price of up to the market cap of gold, which may or may not be being suppressed. Hope you found this video helpful. I'm going to be traveling to some really remote areas for the next week. I hope you all have a good Memorial Day weekend. If you're in the U.S., I'm unfortunately not going to have good internet service for really until Friday, June 4th, possibly Thursday. So stay tuned. If I do end up having good internet service at one of these Airbnbs on the way, I will try to upload a video. But even at my current place, it's taking 2 to 3 hours to upload these videos. So we may have to go for about a week without videos. Wanted to wish you all happy Memorial Day weekend. And if you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.